Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Reality radio for a really great future. We're talking real money.
Whoa, it's another episode of Talking Real Money. They just keep coming. I'm so glad they do because it gives us work. I'm Don McDonald. That's Tom Cock. We're here to talk about real money with you on the Talking Real Money podcast and the Talking Real Money video cast on your favorite YouTube channel, the Talking Real Money channel, at least the favorite of 223 of you.
I'm hoping it's 250 by the end of the week, but we'll see. I'll
It's 223 last I
round
looked.
it up.
Hoping it's growing
Yeah.
by the second.
And today we want to talk to you about the financial business and really the trust. You know, I wish people generally.
Come on. You can't trust anybody in this business.
You know, but I think people generally believe, and we know this because people walk into banks all the time and think the nice person sitting at the desk is trustworthy. That banks, large financial institutions, because they handle big sums of money, are people that you should trust. And you know, they're not. They don't have your interest at heart.
The banks want you to think that, though.
Yeah, they
They
do.
work really hard to make themselves look trustworthy.
The
I mean, they
beautiful
dress up.
buildings, the beautiful
Yeah.
buildings, the nice people that work there. And there was interesting recently. You may have seen this. I think it was last week when Jamie Dimon was called before Congress, among other members of other bank leaders. And he was interviewed about many things, including overdraft fees in 2020. Now, as you might remember, we had this little problem in 2020 called the pandemic economic meltdown. And pretty much the government handed money to, well, almost everybody to sort of keep things running. That makes sense. And the banks are included in that. And he was being interviewed by a well-known senator. I won't even mention her name here, but she was pointing out the fact that the banks were given the money supposedly in lieu of charging overdraft fees. In other words, when your bank is over, your account's overdrawn, they cover expenditures, but they charge you for that. And they did, along with other financial institutions, to the tune of about $32 billion with a B dollars in 2020. Now, I'm not opposed to capitalism. You know that.
Oh,
Believe
no,
in
you're a
capitalism.
capitalist.
I'm a capitalist. Always have been.
You're even a bigger capitalist than Paul or I am.
Yeah, no, I mean, I was selling Holly door to door at age 10. So I've always been a believer in selling products that people kind of want.
He didn't mean he was a pimp. It was Holly.
That's a good point. Thank you.
Holly
Like
and Ivy.
Holly from trees. Thank you for that clarification. So, I mean, Mr. Dimon
Hey,
was
Holly,
asked.
I'm going down the street again. You want to go with me?
Was asked repeatedly, about these overdraft fees. And his take was, well, yeah, we kind of made that promise, but there were conditions attached. And it turned out that the conditions were a number, including the fact that you had to call the bank to tell them, oh, wait, can I get an exception here? And then the senator asked him, will you be returning those fees? And there was a bit of a pause at which he said, no, he would not do that.
It wasn't? You sure he didn't go like,
yeah,
what?
may have turned off his
give
camera
money
because it was a remote interview, so he wasn't there in the chamber.
Not on your life, Liz. Not on your life. I am not giving that money back, damn it.
$30 billion. And you pointed out that the next day, I think there was a piece in the Wall Street Journal that showed that banks did get about 10% less in overdraft fees in 2020 than they did the year before. So, wow, that was really nice of them, I guess, at some level. But the fact that you have to, first of all, call to ask to get the money, it does bring up something I think is true for all of us. In any transaction, you really do need to stand up for yourself. I mean, I had this happen recently on a plane where the airline guarantees you'll get your bag in 20 minutes, or they give you a certain number of miles free. And it happened to me. My bag took 35 minutes. I checked my mileage account a few days later, and seeing no amount, I called them up and they said,
Okay,
"Oh, well,
wait. You foolishly thought they would just
I thought that
proactively give
I
that
didn't
to
get
you?
my bag for 15 minutes after your deadline." Yeah, I did.
He's
That's naivete.
he's the naive capitalist.
Exactly. So I called them up and I said,
Yeah.
"Wow, I'm looking for the credit. Oh, well, we'll put you through to the baggage." Okay, fine. On hold. I know the world today. I finally got somebody and they said, "No, what you have to do is when you get the bag late, then you have to go to our office right then to get the voucher, and then you bring that back, we'll credit you." So I said, just to make sure I have this right, my bag was late, and then I have to be later by going to an office to get this thing. Just want to make sure I'm clear on that.
How many people were on your plane, roughly?
100.
So they literally expect
That's a good
that
point.
for
You would
you
have
to
gotten
take
in a line.
advantage
Yeah.
of 100 people
Yeah.
have to get in line.
Yeah.
I am sure they do not. What you should do next time you fly that airline that is named after a state, what you should do the next time you fly that airline that is named after a state is at the baggage claim is go, "Attention, everyone. Our bags are now more than
Go get
20
in
minutes
line."
late. I'll meet you at the line at the baggage counter."
Yeah, it sounds like a good time.
If everybody would do that, that would change their policy very quickly.
Yeah. Well, and the nice woman on the phone was surprised I didn't know the conditions. Now, to their credit, they did give me the mileage because I was a first-time
Complainer.
complainer. So they did. But it did bring to mind that generally in these transactions, you need to be paying attention. Number two, you do have to oftentimes put your hand up and say, but at the end of the day, I think it's kind of the Russian proverb, trust but verify. I think it's doviya, no preveya. I mean, you got to be.
Thank goodness you're an English speaker.
Thank you, because, my Russian is really poor. The fact is, yes, you've got to be questioning. You've got to look into things. You've got to pay attention. You can't just sort of hand over your money or your bags or anything else and expect that, it'll all work out, because oftentimes it does not. The banks are not your friends. Most financial institutions really are in the business of providing for their shareholders, not for the people that are their investors or their customers. It's sad. It's true. And again, there is no one solution I know of other than, as I said, paying attention, raising your hand, and trusting but verifying, I guess. And that's where you're going to argue with me, I think, a little bit.
Well, not really. I'm
Okay.
just going to say you do need to be the squeaky wheel sometimes. But the key to being a successful squeaky wheel, as one who has, as a young man, worked in customer service for big companies for a long time, to be a successful squeaky wheel, you need to be a polite squeaky wheel. That is absolutely the key to success. You will get so much more than if you yell at people. Unless, of course, you get the overseas service guys, and then you got to get somebody else. Sorry, they're rigid. They just don't bend. But yeah, you got to ask. You absolutely have to ask.
Sad but true.
And when it comes to your investments, you absolutely must ask anyone with whom you deal, are you always required to act in my best interest?
Always.
Always is the key word. Well, I hope that helped. Now, we'd like to help someone else because people write us with questions at talkingrealmoney.com. They also call them in at 855-935-TALK. Here's another one written in, Tom. It's about mortgage versus taxable. We're going to have to go to the question for the answer. Love the show. I was hoping you could help me with the decision to pay down the mortgage versus invest in a taxable account. I am in my mid-30s and only a couple of months into a 30-year fixed mortgage of $600,000 at 2.75%. Ooh, good rate. With an income of around $300,000 a year. I itemize my taxes, my effective tax rate around 2%? Whoa. My oldest child will go to college in 15 years, and we'd like to be mortgage-free at that time. So we've been auto-paying our mortgage on a 15-year amortization table. We have $60K in emergency, saving around $100K for retirement, including employer contributions, no debt. I know the right move is to put 100% of the extra money into my taxable account in a globally diversified equity index fund, but I am tempted to pay down my mortgage faster. Although I am quite risk tolerant, I'm usually 100% in globally diversified equities, I am quite debt averse. Although I understand my net worth will almost certainly be higher with saving over low interest debt, I have a stressful job and don't know if I would be comfortable cutting back while I still have the mortgage. I feel like I keep going back and forth on the issue, and I have days when I feel like I should put 100% into the mortgage and other days where I feel like I should put 100% into taxable. Should I do like Solomon and split the baby?
Well,
Thanks.
the right financial answer, you've already said. The right is to save the money, to invest it, have it liquid, have it available for whatever period. The right emotional decision is your emotional decision. I mean,
Right.
this is because the numbers are going to be very clear, especially with a mortgage at 2.75%. I mean, that's very cheap money. I would suspect that if in a portfolio, because you're young, 80% in stocks, 20% in bonds, that, gosh, you should be making 7% a year for a very long time. And even when you take the money out, a long-term capital gains tax rate, 15%, you're still going to end up way ahead of the 2.75. Now, that all said, is this the home you want to spend the rest of your life in? Have you really thought through, like, I only want to do this high stress job for another fill in the blank number of years? That could play into it, where like, I'm going to reduce my income in 3 years or 4 years or 10 years or whatever it is. So that could play into it. And by the way, another strategy you could do is overpay a bit now so that when you did get closer to retirement, you get a new 30-year mortgage with a very small payment, still at a relatively low rate. So, I mean, there is no one right or one wrong, but financially, you already said the correct answer, and that is save the money, invest it for the long haul in and thank you for saying it, globally diversified equity portfolio. Really appreciate that.
I have a better idea.
Okay.
I do. This is actually a good one. Psychologically, you're going to play a little psychological game with yourself. The psychological game is, I have a new taxable account that has ETFs in it, globally diversified like VT. And so I won't get hit with a lot of taxes. And I'm going to write on that account in the notes section, pay off the house account. You mentally identify, earmark this account for that possibility that you might want to pay off the house because you quit the job early and you give up and you go, and see what happens for the next 5 years. I'm guessing that you're going to end up with more money in that pay off the house account than you will have put towards paying off the house.
I think that's sage. Yeah, no, I mean, and by the way, I do want to clarify one thing you said about taxes. So the operation of exchange traded funds produce very little taxable type of events versus a mutual fund, which has internal capital gains, et cetera. But you're still going to have, when you get to the end of it all and you have that money saved, you're still going to pay capital gains tax on whatever earnings you had in that period of time. There's no way really around that. It's the operation of the funds while you hold them that are more efficient in an exchange traded fund than they would be in a mutual fund.
But just remember, if you are paying down the mortgage, your effective return on your money is 2.75%.
That's right.
If you put it in another account, and even if it does well below what the market has done in the past, is still very likely to be way above 2.75%, giving you more money to pay off the house and giving you, if you decide not to pay off the house, massive liquidity when you move somewhere else.
I like the idea that psychologically you're putting it aside to pay down the house.
Yeah, you call it the pay down the house account.
That's good.
Call it that.
Yeah.
Name it that. Thanks for the note. Thank you all for your notes. Thanks for telling everybody about the show. I know some of you don't, but we hope you will come around and do that. Tell your friends, your neighbors, your relatives, your enemies. Come on.
And by the way, in addition to that, please subscribe to our YouTube channel, our overused YouTube channel.
We want to break 250 by the weekend, apparently. That's our goal.
Yeah, I guess that'll work.
And it's so funny. I do all this work for this YouTube channel. It's a lot more work than the podcast. And we get like 50 or 60 or 70 views. And the podcast every day gets like 3,000 listens. Does it make any sense? No, but apparently a couple of people wanted it, so we're going to do it for a while. See how it goes.
The makeup alone takes you more time. I get that.
Yeah. Do I look like I'm wearing makeup? Think about that for a minute. I think I'd look a lot better than this. Thanks for listening. Thanks for watching, both of you. Tell your friends and neighbors. If you really like what you hear on the podcast, go to Apple Podcasts, leave us a review. We love those. And spread the word. Oh, by the way, if you need some complex help, more complex than we can, give you on the show, go to Vestory.com. That's our advisory firm. Vestory.com. We have a bunch of great advisors, and all of them are committed to helping everybody become a better investor. And to that end, we will sit down with you online, on the phone, in person if you're in the Seattle area or some of our other areas where we have offices, and help you with getting that plan started or getting a second opinion on your messy portfolio.
And by the way, they need the calls because they were just playing ping pong a minute ago. So apparently people are not busy enough here. So yeah, do.
Go to Vestory.com or call 800-386-3004 right away and say, I want to talk to one of those advisors who's in there playing ping pong.
Break up the ping pong game. Get on the phone.
Forever. Dump the dumb Dow and pound the ping pong.
Good stuff.
Thanks. I'm getting used to looking into the camera now. I'm trying. Thanks. Thanks for being a part of this. We really appreciate you being there. I'm Don McDonald. That's Tom Cock. We just hang out talking real money.
Talking real money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.